Hello, I'm Ron Wilson. In this month's news, Federal Treasury's mid-year economic and fiscal outlook, or MYEFO, downgraded its economic growth estimates out to 2018-19, while AMP research revealed average Australian household debt has increased over the past 3 decades. In international news, the US Federal Reserve increased its interest rate in December for the first time in almost a decade. And Wells Fargo has predicted global economic growth of 3% for calendar year 2015. In other news, Australian superannuation balances rose 20% in the 2 years to 2013-14, and ASIC has conducted a review of the cost of cover in the professional indemnity insurance market. Michael Pollock has the details.
Federal Treasury's mid-year economic and fiscal outlook, or MYEFO, downgraded its economic growth estimates for 2015-16 from 2.75% to 2.5% for 2015-16 and from 3.25% to 2.75% in 2016-17. Growth estimates for 2017-18 and 2018-19 were similarly revised down from 3.5% to 3%. As a consequence of both the weaker outlook for domestic economic growth and more recent policy decisions, the 2015-16 budget deficit forecast was increased to $37.4 billion from $35.1 billion. The weaker GDP growth forecast was attributed to a greater than expected fall in some key commodity export prices and slower than expected wages growth. The average Australian household has taken on considerably higher levels of debt over the last 3 decades, according to the latest AMP and NatSem Income and Wealth Report, released in December 2015. 2 significant findings for the period from 1988 to 2015 where average household debt rose from $60,000 to $245,000 after inflation, and the ratio of household debt to disposable income rose from 64% to 185%. The report claimed that the combination of declining interest rates, low unemployment, and a generally strong Australian economy had encouraged Australians to take on more debt while at the same time cushioning the impact of larger repayments. The rise in household debt means that the average household now needs almost 2 years of after-tax income to repay all of its debt, compared with only 8 months of after-tax income in 1988. The combined debt for Australia's most leveraged households is around 6 times the annual disposable income. Overall, Australian households were found to now have the 5th highest debt levels in the world, with more average household debt than comparable economies such as Canada. The US Federal Reserve's Federal Open Market Committee, or FOMC, decided at its December meeting that the time was finally right to lift the Fed funds rate for the first time since 2005. The Fed increased the rate by 25 basis points to a range between 0.25% and 0.5%. In looking ahead to the timing and size of future rate increases, the FOMC noted that economic conditions, both actual and expected, would be assessed against its twin objectives of maximum employment and 2% inflation. For Australia's economy, the rise in US interest rates is seen as broadly positive, as it signals a strengthening US economy able to finally move on from the woes of the GFC. Full-year global economic growth for calendar year 2015 is expected to come in at 3% per annum, according to Wells Fargo Economics Group in its Global Chart Book, December 2015. While the final outcome will depend upon yet-to-be-released fourth-quarter data for a number of countries, if 3% is realised, it will be the slowest full-year global GDP growth since the global recession in 2009. Wells Fargo attributed the low rate of global economic growth to a broad decline in commodity prices, slower growth in China, uneven rates of growth in developed world economies, and weakening currency valuations for emerging market economies. The IMF announced in November that the Chinese renminbi would be added to its special drawing rights basket. The decision to include the Chinese currency means it becomes the 5th member of the basket of currencies which make up the SDR, alongside the US dollar, the euro, the British pound, and the Japanese yen. The change will not come into effect until October, to give the IMF and SDR members time to adjust. From that time, the value of the SDR will be based on a weighted average of the values of the 5 member currencies. The average superannuation balances in 2013-14 for individuals aged 15 and over were $54,916 for women and $98,535 for men, according to data compiled by the ABS on behalf of ASFA. These balances represented an increase of around 20% over the average balances recorded in 2011-12 for women and men. The data also indicated that gender disparity was still very much an issue regarding superannuation. The share of superannuation assets held by women, 36.4%, plateaued over the 4 years to 2013-14 after growing significantly over the previous 2 decades. ASIC recently conducted a review of the market regarding professional indemnity insurance for financial advisors in response to concerns from AFS licensees over access to adequate cover at reasonable cost. Report 459, Professional Indemnity Insurance Market for AFS licensees providing financial advice, released in December 2015, contains the findings of ASIC's review carried out between November 2014 and June 2015. ASIC identified 5 areas where PI insurance policies did not meet the requirements of Regulatory Guide 126, compensation and insurance arrangements for AFS licensees. Defence costs, which are required to be covered above the minimum limit of indemnity, were instead included in the minimum limit indemnity at $2 million. A lack of at least one automatic reinstatement in the standard terms and conditions of one insurer that provided PI insurance cover for 185 advice licensees, an absence of fraud and dishonesty cover in the policies of 2 of the 4 insurers in the review. Policies of 3 of the 4 insurers included an aggregation clause and an external disputes resolution scheme sublimit, which may give rise to a significant gap in cover, and regulatory risk also existed when insurers would not aggregate claims and so trigger separate excess payments by a licensee for each claim. The latest industry data released by the ATO shows a growing number of SMSF members moving into pension phase, with an 8% increase in the number of SMSF shifting into full pension phase over the past 5 years. According to the ATO, this shift is reflected by 32% growth in SMSF members receiving benefits payments from their fund. The 2013-14 financial year also saw a rise in total benefit payments to over $30 billion.